All right, there we go. We're in business. So look at this. The flush below, but failure to close. So in the event that I was going to say we trade up above this high, we're still continuing higher. And these are the things that you don't want to get caught in. If this is a failure to go below the previous candle, that means that there's still a ton of demand that's pushing price higher. So you see, now we get into our zone right here, right? Now what you want to pay attention to here is closing up above that. We got our close. You see? Let me just make sure it's not a gap that closed that. No, it's not. It's not a gap. Wait, is this work? Oh yeah, okay. It's not a gap. And what we have is this here. So in the event that we push and get a rejection out of here, we see it drop back into here to in turn move us up. If this move doesn't give us that push up, then what you often see is price drop back down and take out this low. And the swing in this area is from this high, this bullish candle's high, to this bearish candle's low, just like that. Like that. Okay, my brain hurts. Um, yeah. So about that, there's some people who have not watched the playlist, and we've encouraged watching the playlist at least about 10 times or so to sort of acclimate yourself in the things that will be said during this live stream. And if you can't keep up, and this is very basic, very, very basic. I think we went over this in Zero to Hero. Zero to Hero, we went over this. You see this drop from there? You see that? Somebody say yay. This is very, very basic stuff that's here. But if you are missing any of the information that's in the playlist, especially how structure moves, I went through multi-time frame structure already. If you're missing any of that, it's going to be very difficult to keep up with what we're doing here. So it might benefit you to either go and study up on these things. Even look at some of the live streams. Listen to the way I explain things. There's live streams out there in the public that still got crazy sauce to it. The October 5th stream that I gave to you guys, the back testing stream that I gave to you guys, all of this is dealt with in those videos. So if all of this is dealt with in those videos, then, it would behoove you to catch yourself up to what's happening here, or else you will get left behind. Now imagine being in the right place and not taking it serious enough to actually excel and do well. Because if this is hurting, then guess what the 5 second is going to look like? 5 second is gonna hurt as well. Because we have these things here, we'll move them out. Put that there. Another move here. And you got this swing below. That price created. So now, us being on the 5 second chart, we see market structure a little bit different. We see a high, a low here. We put in another high. We trade it to flush out this low and then trade it back up and kept putting in more highs. So the 5 second structure right here, it would appear that it was broken with this body closure below after taking out this high. But that's not the ruling time frame's structure. The ruling time frame structure is here on the 1 minute, which the only structure that this put in is this high and this low. It's the only structure we have. Let me just go back some. There's the double bottom there. Sorry. There's a double bottom there. Now what we anticipate is price to trade away from that and then drop back in to run this out. Y'all already know who this is. Toilet paper people. Drop them and then often go back for their counterparts here. But on the 1 minute, this is just one candle. So what's this, 42 seconds left on this candle? Let's see how it closes. Either maybe as a doji or a hidden S&D. Right there. Where were the lows we said was going to run out? Here. Now all we want to see is this close as a hidden S&D, close as a doji, and then we'll anticipate and move back into this range. Usually the telltale sign is us going below this here. There we go. If this ends up getting a close into here, that's where most of you guys see like the turtle soup entries, all that other stuff that usually happens up above an old high or whatever. That's what they call soup. We more than likely would trade back to, let me see, 21 it could be. You guys see how this is dropping back in here like that? You see where we headed? I gotta mute this part of the video because the lawn people are outside. So just know if you hear this muted when you're rewatching this, it's just because the lawn people are outside. All right, let me bring it back up. So you see how we mentioned we took out this high. Let me just move this. We took out the high over here, right? We talked about this being toilet paper people. They would go to run them out and then go to run them out below, right? Now that's just a 5-second toilet paper people. On the 1 minute, we have this. Go above that high, put that high in. We should see them get ripped and then them get ripped too. Same thing. Guys, I'm sorry. The lawn people are back by the window again. I apologize. With the same target of there. And if this ends up being an equal high up here, let's say we trade up above this and come back in and you start to see us drop lower, then that's giving you that confidence that these lows are going. Why? Because these lows are a part of this high and this low would have been a part of another high that was put in, and we'd end up violating the both of them. Textbook playlist. It's just this is rejecting out of the 70% of this right now, but I want to see it take out the high, especially with a flat top there. Premium. Yes, these streams will be recorded and saved, yes. There goes that run. And as we talked about in the playlist, you start to see price getting tighter and tighter as it leads to a rejection. And remember what we're doing. We're trailing this, the bottom of this, because then that's going to give us that entry to go back up in there and drop down like that. And we have this swing below. There's a little imbalance inside of here. We get there, just know that it'll be a little bounce in there because of that imbalance that's there. That kind of impulse got me wrecked. Sorry, I just turned on the recorder. Thank you for reminding me of that. That's what gets people wrecked. Sorry. That in particular. That, it needs to go higher because if the stars and the moon align, then when the stars and the moon align, we're going to have the Sibby Bissy into the golden block of the quarterly within the accumulation of the Sibby and the, all of that. Don't know where to put your stop loss. Ran. Holding in drawdown when you know you shouldn't be. Ran. So please, there are things that bother me and things that I overlook at times. But when it comes to not, and I'm not saying speaking over me, because everybody can share whatever, idea they have. But it's very extremely reckless. Extremely reckless. Based on some little tool that we place on the chart. Do I got it here? Based on some little tool that we place on the chart. Oh yeah, we gotta go to the 4. We gotta go. You didn't think I took into account all these different things that are on Twitter? All these different theories that people have in regard. We gotta go to, because according to, no, we don't have to. We don't. And that's what gets people wrecked, being short-sighted in one thing that's occurring based on something that already happened, and now they're getting in on something against what the narrative is actually showing us. So I don't care whether it's the top of this candle that you're supposed to use. I don't care whether it's this candle. Well, it looks like it's not supposed to be that candle. It might be this one. I don't care what candle the projections are thrown on. Narrative and price action beats every tool you can paste on the chart. Every single tool you can base on the chart. You can put on the chart. You can paste there. Narrative and real-time price action beats that every time. And Jazz is in longs and shorts, by the way. Why is the teacher shorted? Because the teacher's trying to teach you guys that you should not be looking the other way. Narrative is already building up for us at the top of here. Why on earth would we be doing anything? Did you guys watch backtesting yet? You guys watch that? You get more than likely if we get back. Did we get back into this imbalance? Not yet. More than likely if we get back into this imbalance, we're gonna end up filling the imbalance. It was down to 857. Let me just move this out of the way. I don't even care about that. That rejection was from a 12-minute. Hey, beautiful, beautiful. Beautiful. Yeah, I didn't know what time frame this was coming from. I was just watching order flow. So you figured, I told them, some of you guys are new in here. I told them that, and this was last week, that when the candles are getting tighter like this, when this is happening, this means that price is looking to go the other way. One of the foundational students came and explained that that's something that he took and held on to and kept within his trading, that you wait for this to occur to begin to look for the other side of the market now. Now, of course, you guys are not going to learn everything in this session, but you guys show up every day, and I promise you, 30 days from now, your trading would look a lot different than what it is now. No deviations needed. Look a lot different than the way you trading now. I can promise that. It will look a lot different. Wait for something to get taken when price go down and the same momentum up. Yeah, so that's why I'm anticipating this low being taken as well, and the rest of this imbalance being filled right here. But we'll see. We dropping on this way. Now, whoever was short and they were greedy, they got taken out. The money, it snatched the money from you. You had it in your hands. You got to grit. Snatch. Thank you. That's the weak. That's the weak to strong hand transfer. That's how wealth is transferred. Oh, you too greedy? Okay, here. You want to buy that high? Okay, here you go. And they head back the other way on you. Now, when they ready to buy back again, guess who they buying it from? You, at a devalued price. That's the way the whole market works. At a devalued price. You know how many times I've been in this entry right here thinking we were going higher and we drop back that way? And I'm full with like 6, 7 contracts, 6, 7 lots. I'm full in there like, yeah. Oh, we about to pay for the yacht in this one. Yeet. Head back there. You margin call before you even get here. With the size you trading with, you margin call before you even get there. Yeet. Somebody made mention to my fib. I got a fib up here. If you guys look at this fib. I got a fib that says OT yeet. Because this is the fib that a lot of the traders use. The ICT traders, you know, they got the fib there. The fib. Oh, here goes the OTE level. Nope, it's OT yeet. That's what. Yo, dag, how they gonna do me dirty like that? They didn't want to feel the rest of it. How they look at this? Look at this. How they gonna do me dirty like that? You gonna leave this open? Dang. I could probably buy some of Joey B's eggs with this gap. What's this? 1 point, that's about $20. Yeah, I could buy some of Joey B's eggs with that. But look at it. Look at this whole drop heading the other way. Well, everybody else has this idea that price has to trade. No, it doesn't. And you will find out through your stop loss, through losing your account, that it does not have to trade higher. Who wants to find out that way? Who wants to find out? Who wants to lose their account that way? Not me. Magma, you need to slow down and stop asking questions. You need to just observe. Slow down. You ask a million questions, which are great, but it's not the right questions. Slow down. Observe what price is doing. And that's how you'll develop. So, this is the large drop that we talk about right here. Now, I do understand why ICT don't talk with the chat open, because I could imagine the stuff that you're trying to explain price in real time and people are asking about your personal entries. I'm sorry. So when do you actually learn how to trade this? So we have this drop that came down, right? Traded below this low. It's the same thing that we mentioned up here when a high was taken, right? Toilet paper people get smoked out. Cool. We have this. That we mentioned that in the back testing session, right? They have that. We run below a low. They had that move back into the range. But then what? We could also see another drop below to take out these people below. Because who are these people? It's the toilet paper people there. And in the event that they make their way up and put in a high here, that becomes the toilet paper people from that side. And what do? Drop the market on them. And what do? Go back and smoke them out too. So this is something that we're observing. We're watching price do this, and we're watching how the order flow plays out, right? Now, this is beyond structure, because if you look at the low to the left, there was no body closure on the low to the left. So we got the body closure of the high above. That's why we consolidated. We don't have the body closure below this previous low that's here. So that's another thing that we're paying attention to. If we are anticipating getting a body closure below it, then that means price has to trade back down further and close. Usually that's with whatever higher time frame this is from. Let's say this is from the hourly, or let's say it's from the 15-minute. Whatever time frame this is from, that time frame needs to close below. So by the time we open up one or two other candles from that time frame, we should have already been below with a body closure in order to trade back into the range. We also just traded down through a zone just like we traded up through a zone in the example Dave went through at the beginning. Yes, that's it. The same example that I went through there is the same example of up here. This zone that you see right here, what did we have at the top of this zone? Double top above a demand, right? Just like we talked about, a double bottom below a supply. Same exact thing. So great job, Aram, pointing that out. I meant to mention that, but it slipped my mind. But great job. You took care of us. You the most, baby. If you have to zoom in to see if it's a closure, it's probably not a closure. Great mindset. If you got to zoom in to see that it's a closure, it's probably not a closure. Great mindset. And you're not looking for the lack of a 1 minute closure. This can push up and drop back down and close on another time frame. So you're not looking for that. You're not saying, oh, no close above, we're going back for the highs. No, you need the market to show you that. So you see how we mentioned we were coming up to this high up here? Or sorry, not the high, but this area right here. You see how the drawings are there? Moving up to that way. And this is the area we look to trade above. And this is oftentimes where we're cutting our position to now watch price. If it wants to pull back out of this area, we'll observe it pulling back out of this area. And when it does pull back out of this area, we want to know, is it going to take a low that brought that move up there? And that's why you don't look to trade everything. You are not trying to trade, oh, it's short to long, to short, 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 to long. You're not looking to do all of that because you end up missing the detail in this. You end up missing measurable areas for you to exit. You end up missing what order flow looks like when it takes a low, what we're anticipating when we trade back into the range, what area we are moving back into the range of based on what happened to the left. You know, like there's all these different things you have to account for. And if you're trying to be the person that wants to take every single trade possible, guess what? You're going to have issues. Because this is mentorship. You're going to have issues. You're going to arrive at the same place that you've been at for the last few years. It doesn't matter what strategy it is. It's discipline and self-control that is placed within the strategy you are trading, within the whole concept that you're using to make financial decisions on. You are trying to place your discipline within that. Yes, we know we can take a ton of trades. Yes, we know we can take every trade if we wanted to. We're aware of that. We found that out in back testing. But is that the way we want to survive? Is that the way we want to find consistency with every single thing out there? And then before you know it, here's where the analysis paralysis comes in. Here's where it comes in. It looks like it's short, but then it also looks like it's long. But maybe it could be still short, but possibly it's long. So I'm not too sure yet. And you're still trying to find a move within that paralysis state. No, I don't know. It could be long, but there's a possibility of it short. Because if you see this with, hold on, let me go back to the 15-minute and see what I can see there. Because oftentimes Now you have all these different things that came from, remember when you were short, long, short, long, short, long, short, long, short, long, short, long. You were causing your brain to see all of it and remember all of it unstructured. Unstructured. That's what you were doing. You created a way for you to trade that lacked structure to it. So now you don't know whether this trade is high probability or not, because when you thought it was high probability with high leverage, it smoked you. And now you feel anxious to hold trades. You feel anxious to get into trades. You don't even trust yourself anymore. Why? It's the way you developed yourself as a trader within this system. You chose to do it in an unsustainable way. And a lot of people will get there. A lot of you guys will get there if you don't, and you hear me say it all the time, slow down. Slow down. If you don't like this part of mentorship, the cancel here button is there. Because you need to slow down. You don't have time to keep crashing, to keep running into the wall. You don't have that much time. Plenty of people join to change their circumstances, to change the kind of world that their family currently lives in now. Plenty of people have joined. But you have to understand. You have to understand that you need to create structure and routine around yourself too, not just the charts. Not just the charts. You're not just grabbing any old swing because it's there. Oh, that's an up candle, let's short from there. Oh, that's a down candle, let's long from there. Oh, that's a swing? Yeah, let's just grab it and short. Let's just grab it and long. And then you wonder why you can't trust yourself. You wonder why you can't get it. Because you're not following the routine. You're not following the instructions, the path that was laid before you. You're not following that. Going there, can't tell, been there, how to get there. So if you have not been consistently profitable each and every single day that you come into the market and trade, then that means that you should leave your theories and your understandings and your advice and your opinions. You should leave it at the door. And let's follow what it is that's taught here, because this is where that everyday consistency is going to come from. There's no way that you can be under this type of server, under this type of leadership, under this type of work ethic, and you not win. There's no way. No way. While I'm encouraging you guys to look the other way for a short back into this area, other people are looking to go further than this. And why do you think these are always the areas where people blow their account? Get margin called. Some people are always getting margin called at the top or the bottom of the move. Ain't that crazy? At the top or the bottom of the move is where people are getting margin call. So we got to change some of those things. Again, I'm going to have more people in here to give you guys a hand with what you should be focusing on, what you should be, utilizing in your trading. There's going to be more people here to help with those things. But work ethic and etiquette too. If I tell somebody they're wrong, there's no way that your explanation is going to make them right when I already told them they were wrong. Oh, I know. He said you're wrong, but look, this is how it is for me too. No, I said go watch the video. Not be the trading Dr. Phil in the server. Go watch the video. Because it's there. If anybody was even adaptable enough, they would take out all of the timestamps that's in the video. They would transcribe it and then search for the keyword. Protected high, protected low. They would search for the keyword. Oh, baby. So, let me just move some of this stuff up the chart before y'all go on Twitter talking about he was yelling out and his charts was dirty. Let me just bring some of this down here. Sorry about the technical difficulties. We've arrived. So nice. We have this high put in. We still don't have a low taken. Neither is this low validated. All of this within here is just 1 minute structure. This within here, you have this low, you have this high, and then we trade to this low. We do not close either. We trade to that low. This is larger time frame structure. Remember what we did before we started? Remember that? Remember that? So we're still following our higher time frame structure, and we're still following our lower time frame structure. We understand that lower time frame structure does not dictate higher time frame structure. Lower time frame structure facilitates higher time frames order flow. You hear that? Lower time frame structure, it facilitates higher time frame order flow. So stop relying and depending solely on, oh my gosh, there's a flip, time to get in. Well, what's the narrative? Where are we in structure? What is price looking to reach into? Where is your entry going to be? It's not in the middle of the chart. And what I mean by the middle is literally the middle. Literally. It's not in the middle of the chart. So one thing that you guys have to remember, and this is something that we always go over in the Discord, and since many of you guys are new, one thing that you guys have to remember. Sorry, hold on real quick, guys. Group. I mean, mention to a young fella in the group where I told him, I said, yes, I understand that your short is there, but do you understand that that's not a good place to short? Do you understand that's not a good place to short? And I believe the short was looking for something down there like that. So it was coming up out of here, which, to his credit, we did hit that. But it's a bad place to short. Why? First of all, nothing was offered. We didn't take a high or anything like that. Nothing structural or anything. And the second thing is top of the range, bottom of the range. Top of the range, bottom of the range. So is there an area within the range that you do not marry an entry in? Yes. The middle of the range. So you guys are going to hear me go through this a lot more as we're streaming here and as we continue to tape read and learn and stuff. You guys will learn about why this is necessary as well. But don't make it a habit of just seeing an imbalance to the left and you going, oh yeah, we're gonna, we could short that back down. We can go for the Asia's lows, or we could go for the midnight open, or all these different things, because that imbalance is present to the left. I don't even use imbalances anymore. They're far less accurate than using zones. Far less accurate. Well, the whole algorithmic community goes crazy over imbalances. They're far less accurate than using zones. So that's why I don't really go over any of the ICT concepts, the Sibi, Busy, all that other stuff. I don't teach deviations. I don't teach any of that stuff that's out there. None of it is needed. All of that stuff is bells and whistles, but guess what? Even within that, they can't find trades every day. They can't execute within the market consistently, no matter the condition. No matter the condition. Trouble executing. And another thing, if we're in a downtrend, let's say price is giving us this low as an actual break. If we're in a downtrend, you see us moving down like that, right? And we trade up. Why would we be looking for confirmation in here? Why would we be looking for confirmation in a downtrend? Confirmation to do what? Okay, we went up above the previous candle's high and closed. Why are we looking to take price higher to go here from there? What structure was broken? This would mean that we would need to put in this low, which usually runs you first, and then trades up, takes out that high, and now you think you can short from here to now go back to that low. And guess what? Wheom! Up the other way. How you poorly position yourself for the first trade. How you stop trailing your highs and lows to understand where you were in the market and when price was getting ready to reverse. There are two different kinds of counter trends. There are reversals, and then there are retracements. A retracement and a reversal, they're two different things. A retracement and a reversal, two different things. So you are not expecting to confirm a downtrending move to go higher. Majority of you, 50% of your win rate is going to come from just not taking confirmations in a downtrend. Why would you confirm price going bullish in a downtrend? Likewise, there's an uptrend. Why would you be trying to confirm at the top of this high just because we closed below the previous candle that we would be shorting down if you did not get a low delivered to you? It makes sense. I know. It's a lot of logic. I know. Half of the time, that's the reason why we're getting stopped out and stopped out again and stopped out again and stopped out again and stopped out again. It's usually from one or two things. Grabbing a random zone and thinking it's going to hold, and trying to find confirmation in a counter trend move. You do not confirm counter trend moves. Ever. Let the confirmation be that price broke the previous protected high or low. And remember that the first break is the fake one. Remember this. The first break is the fake one. The first flip is the fake one. Remember that. Does someone know if this is recorded? Yes, parts of it got recorded. Yes. I forgot to turn back on the mic like 2 times. Not that long though, not that long. But parts of it got recorded, yes. So look, who was the busy Sibia version from the time Tupac got shot? Who was they're getting a little antsy now. Whoa, wait! I took a short and it's been balanced down here. Where at the bottom of the you took a short at the bottom of okay. I'm telling y'all, I know Romeo's the villain to a lot of y'all, but where he be like buy low, sell high, you know. There's some truth in that, even if it's very vague, and there's no like application in real time. Even if it's very vague, there's some tweets that's showing it. You're showing what the, but it's a lot different to say is go in there versus here's my stop, here's my so and so, here's my. Very important. And understanding how some of you guys think and then watching some of you guys go from this 1 minute time frame where it's very difficult to even figure out where price is going. Some people think price is going further up because they didn't hit the areas yet. I'm picking on you forever. I hope you know that. With that thing. But make sure you show up and I'm gonna teach you exactly what I know. So you might, have trouble with this. And people who are having trouble with this, what do they end up doing? Having even more trouble. Oh my God, even more trouble with this. Trying to execute fast enough when they don't even know how to do it slow. The 1 minute. It shows it in a slower fashion than the 5 second. If you have not gotten profitable or even consistent with the 1 minute, you should not be going down to any lower time frames. The 5 second is going to do the same thing the 1 minute does. You have to know when. But the 5 second is going to do the same thing. You see how we talked about the toilet paper people? And we mentioned that from the 5 second. And then we said the 1 minute toilet paper people was being created. It's because we understand how things translate from the daily 4 hour, 1 hour, 144 minute if you use it. You don't have to. 15 minute, 12 minute, 5 minute, 1 minute. We know how all of that translates down to what we're seeing and what we're anticipating when we're trading this 5 second time frame. And if you haven't even got proficient in that 1 minute perspective as it relates to going down throughout the different time frames, 12 minute, 144, that's just my scope that I look at. Other people can look at other ways that they're able to see. Some people might use the 7 minute. You might use 11 minutes. You might want to be contrarian. Not you contrarian here. Not you. But you might want to do it your own way. Some people use the 2 hour. I've seen people use this 7. What is happening? 7? But however it is that you're able to see it, you use that. But why go down to a lower time frame if you're not even confident on the time frame above it? Everybody see Charles in here. Charles Pope, Moneybag Charles, as they call him, all these different names they got for him. Mr. 100K, all these different things. Everybody sees that, but nobody sees what the development was, what the progression was. What was the progression? Losing a lot. His wig being snatched from left to right. Every single trade going against him, can't figure out what's going on. That's a part of the system. A part of the system is that you're going to get to a place where you're gridlocked. Nobody thinks it's confirmation, right? Unless it traces above the previous candle and closes, but I don't think so. Could just end up waking up above it. But those things that he had to deal with internally, watch it all go against him, be frustrated, and then come and ask, hey, Dave, what do you think about? Well, here's what I think about it. Watch these 2 videos over the weekend. Take notes. This is somebody that was already banking 30, 40K in the group. 30, 40K. And was having those issues, struggling as well. And then once he got on the other side of that, oh boy. Woo! 150K, he's dropping in you 3 times in your performance. Just off of the advice of going back over a video, sitting there like it's entertainment. I mean, for some people, it is. Sitting there, you see toilet paper, you get wrapped out. You got him. Got in my face. Get the napkin. This is literally the order flow of things. This is how people mismanage with trading the concepts that we have here. But you can stop that by creating rules around yourself, rules around what you're willing to engage in with price. So do I have an area that's unmitigated? Yes, I do. Here. This is an unmitigated area. We trade up above it. Actually, we tapped into the 50%. We could have another bounce on this 30% right here. But I want to see us get down into the 70 because you get this little imbalance that's below it that you could end up trading back up into the previous range from. Don't tell me I used the wrong one. Yeah, the 70% is fine, but I did use the wrong range. So we have this, right? We have this. We lean down into this drop, right? We trade back up. What do we get? Somebody, I think it was, who was it? Manga, that's you? Magma? Did you? Said the candles are getting smaller. Look, you see what I'm saying? When you really like take time to listen and then you apply it to the chart, candles getting smaller then. Because ain't that what you said, sir? Yeah, yes, it is. What is that? Yes, it is. And do you see a turn? Head the other way. Now, when we head the other way, what do we believe this move going back into the ranges? Now, we got the closure. Wait, did we? Hold on, what time frame is this from? Okay, yeah. Yeah, we got the closure here. This 5-minute closure right here. So we got this closure. Now we have this previous range here. Don't want to see price get back into this imbalance up here, because if it does, it could end up trading up to fill the rest of it. Looking below, we got a couple stuff down there that is taught in other sections. So I'm going to tread lightly on that one. But I would be expecting a drop. I mean, yeah, I guess we had a little bounce here. I'd still be expecting us to get in there and then try to get like that. But this is how we anticipate those moves trading back into the range, right? Because we're not trying to be the guy to say, hey, I'm going to hold up the earth from here. I'm going to toss it back to the sun. And then I'm going to go take a cold shower. This is, we not stop loss or TP. That's not this kind not this kind of trading. No. It's not. It's not the way. So in a downtrend, remember what we said? In a downtrend, we are not seeking confirmation. We're not seeking confirmation in a downtrend. And move heading the other way until we get a body closure above a previous validated high. We are not sold on looking for price to trade up the other way into the highs. And that's equivalent to what? Trade your highs and lows. Trade your highs and lows, that's it. I know you're in a flow. Will you speak to the relationship between the lower time frame structure facilitating a higher time frame order flow and lower time frame order flow delivering a higher time frame narrative? Yes, I will. I will speak to that. Good question. Video 9. That's it. Video 9. I'm telling you, the stuff that I'm saying, I have not changed it. This is the same stuff. I've been teaching this stuff for the since I came out teaching. I've been trading with this stuff, using it. It's video 9. That's what it is. It's video 9. Good question though. Good question though. Let me double check with that. Oh, I see. Okay, cool. There we go. The stream will be uploaded in the Discord. So look at this. This is not something you want to short. This here, you see this drop into the same momentum shooting back up? This is not what you want to look for in terms of shorting price. Unless you have like this large candle, which I highly doubt is going to drop down and run that. This is not what you're looking to go short on. Now, it could short from something up here to facilitate a pullback before running the high of it. But remember, we have this low, we have this high. We put in this low. Look at the momentum leading right back up to that high. So that momentum, if it's not met with the same strike down, the same momentum down, then that's not what you're shorting. We're actually looking to take out the high of it. All right, see you, Prito. See you. Remember, it's gonna be uploaded in the Discord. There's only one section. The streams are uploaded in library. Hey Dave, one thing I'm struggling with, and I know you briefly mentioned in video 5, is systematic approach to your system. Do you have any advice for, say, trading on the 1 minute? Would you say 10 and out on the 5 second and 5 and out? Also trading with a fixed RR versus what the market gives based on structure. So a fixed RR would always clap you, because you can't fix an RR into a system that follows structure. Your structure can be small, your structure can be large. Your zones can be small, your zones can be large. So you have to be able to dynamically manage risk, in that some of your entries on the lower time frame They, first of all, the entries are always 1-to-1 at least. Always 1-to-1. At least. There's something that's, always admonished by a lot of the videos that I have, the tweets that I put out. You will almost always see that. You see a little rejection coming out of it? You see I said maybe the rejection from the higher portion of it up there? Why? Because that's getting next to a structural high. And what do we say in the playlist? Anytime we get near a structural high, we often trade away from it, and then we go back to violate it. So we have drawings that's showing that we would be seeking move away from this zone, in turn to head back up and take on the high of it. But the 10 and out, the 5 and out, you're not always going to be given 5. Sometimes the 1-to-1 is sometimes you see that it can be 10 points. Your 1-to-1 can be 20 points. Your 1-to-1 can be 35 points based on the size of the zone. There's so many different opportunities because there's so many different zones that are taught within the playlist, that if you use narrative properly, then your stops will be very, very small. So in terms of the risk percentage, that's, personal to you. The RR, that's your zone should be giving you at least 1-to-1s when you're using them. And in terms of taking what the market gives based on structure, you need to go into back testing. All right, so you enjoy. You need to go back test. And when you back test, look at what these zones give you during back testing. Don't try to approach it as if you're saying, I want it to give me this. I want 30 points and I'm good on the day. No. Back test the zones that you're choosing to trade from. There are some zones that give you a larger push than others. There are some zones that it'll trade out of the zone and steam out that way, going right for the high. Those particular zones need to be back tested, and you need to know when to and when not to. So back testing is the only thing that you'll get that real answer of what you should target. I don't know what you see. I don't know if you take trades based on a wick or if you take trades based on a fractal because you want to risk the smallest amount you can to get the most you want. I don't know if you take the S&D responsible. I don't know if you choose the origin of the move to trade, but I don't know if you choose swings. I don't know if you use imbalances. I don't know if you, there's a ton of stuff I do not know that you use to say what your risk should be, what, all those different things that you need to calculate within your trade in terms of profit. I don't know that stuff, but you know it. And that's why you should back test, and you should see what you usually get out of the zones you're choosing. And that is how you develop the plan as to whether you're going to, take 5 or take 10 or take 15 or whatever it is. It needs to be something that's easily recognizable to you, not me. This is why you could jump from one instrument to another based on time, date, etc. Momentum, volatility changes from one to the other. So that's why I trade gold in Asia and I trade NQ in New York. And maybe I look at GU, EU in London sometimes every now and again. Who knows? Or UJ all day. There's some pairs that have round the clock volatility until it closes. There are other pairs that do not have the volatility we're seeking, but we're forcing entries because we want that volatility to appear, or we believe that it's time for it to appear. And then on Monday, when there's no news, it's, oh no, we can't, because it's just seek or destroy conditions, and they might manual intervent my stop loss. They're going to manual intervent my stop loss. So it no manual intervent stop loss Mondays. We're not even going to trade it. That's what you hear. Do you ever look at 030? Yes, I have it right on my thing, right to the left. Right over there, yeah. I look at all the exchanges from all different countries. What in Spain, Japan, Hong Kong, India, all of them. They all there. Maybe I'll find some others to put there, but they all there. I look at all of that. Everything. Because people have different theories. Some people believe that if the Euro 50 closes bullish, then indices should close bullish for the day. They believe if it closed bearish, then industries should close bearish for the day. So when I hear these things that you can't find any real actionable trades on, when I hear them, oftentimes I'm going to search out the pair and looking for what these people say and verifying it. And if I can't verify it, I'm just going to simply say it's not true. Oh, you shouldn't trade August because the seasonality chart is the bearish month and all that. So if seasonality is correct and it's a bearish month, then what you should do is go ahead and just drop in a short there. Don't worry, your short is going to be a profit by the end of the month. Oh, it doesn't work like that now, huh? So, but you have to, put it all together with you can't take a trade based on that information? That information means nothing. Because these charts, what they're doing, what we're seeing in real time, that is how we're taking entries. That is what we're basing our entries off of. Not the reverse repo, whatever stuff out there. It's what we're seeing here. What we're seeing here. So that's for the rest of y'all who gonna come in with, all of that other stuff that's out there, all the other stuff that people use. Oh, this one guy shared something in the group one time. He was like, wow, this is beautiful data. And I'm looking at it and it's showing like all the manipulations of like certain days of the month in the year, throughout the last 12 months. And wow, what beautiful data. Okay, what does that even mean? How can you use this in an actionable way? How can you use this for direction or understanding of when to, when not to? And then crickets. Not even talking about the sport now. No, nobody talking about Imran Khan right now. These crickets. You cannot even materialize anything using this information to trade with. So this is an introduction to some of y'all. Welcome. The chart is anonymous. This is an introduction for some of y'all. This is not a mentorship where we just share useless information that people will not find profitability on. There's a reason why there's a ton of profitable people in this group, and you can't find that in a lot of other places. It's not possible to really find it in a lot of other places. There's people growing and developing just over 3-4 weeks. We got ICT charter students in here that was in his original mentorship. It was in some of even the other ones after. And they're coming here and finding so much success. Because it's like, here's how you do it in real time. I get the theoretical approach of everything, but here's how it's done in real time. Here's how you take entries on it. Here's what you don't use. Here's what you use. You don't need time. Let me bring this up, right? I ain't even got no music in my ears. The coffee done wore off. So, there's going to be a lot more sessions where more questions are answered. You guys will get an understanding of what I'm saying now. And you'll understand that as harsh as I am with saying the things that I'm saying, it rings to be true. The logic is there. You're going to see it day in and day out. As a matter of fact, since I'm taking streams off the back end for members, the rest of this week leading into Friday, show up. You guys only had 2 streams scheduled. Now you have 4. Show up. Because you need to get this thing, and you need to get it in the manner in which it's taught. So some people with their disobedient self joined without watching the playlist, but didn't want to miss up the opportunity. So I guess I suppose I understand the FOMO in that sense. But you got to work while you're here. I told you guys with these streams, I see some of you guys posting in these areas. I'm going to be calling some of you guys out. Oh, you put this trade in indices chat? Okay, great. Tell me one thing you're struggling with and find one trade right now. And it's going to get hot in here. I'm not the guy that you can't talk to. The guy that you can't write anything in the chat and ask questions and say whatever. I'm not that guy. I'm going to respond. I will defend my concepts to the end of the earth because I know this is what I use. And I know that this is all you guys need. Nothing else. Nothing. Not another thing. You don't have to have an indicator on your chart. You don't have to pair this concept of time with that concept of whatever. You do not need to. All you need is to be able to see it for yourself, because when you start to see it for yourself, guess what? You take this everywhere. Can anybody find the opening range of the interest rate chart right now? Anybody know where the DI IDR range is? Anybody know where the SIBI and BISI is in this mortgage rate chart? Showing that rates were continuing. And anybody? They can find it in here? Because this is not something that's bound by time. This is bound by human governance and human behavior. That's why you see all of this occurring. And that's why we can find it in so many different things. We can see it in bonds. We can see it in yields. We can see it in all these different things that are out there. You can chart. I told some of the group, I bought rice down here. I saw a double bottom forming back in October. Down below. Let me. So there's double bottom forming down in October. Let me show y'all it. Right down here in October, and I started buying rice from down here. Because I said that we have this double bottom here. We have this large drop. We see toilet paper people get clapped. We go back to take them out and we flip. Right? And now we see price looking to get back in here. There's the S&D responsible for the run of this low, but it looks like price is looking to take out the high of it. So what does that look like on inflation and you know, the cost of being able to purchase these things that we use daily? There's wheat here, there's corn there, there's all these different things that affect us. And we know how to read it. So do we know whether soybean is making another low yet or not? Yes, of course. Equal low, equal highs. Take out the man. If you actually learn the skill of this, it's not about trading within the SIBI and the BISI of the time with the, you know, when time and price align in the vortex of the, you know, like, you don't need any of that. All of that is brain fog. All of that is stuff that's gonna mess you up. So you see what I was saying? Who was the guy who asked about the fixed risk, right? You see the fixed risk right here? Or the fixed whatever, the RR, all that other stuff. I said at least. Oftentimes you get at least. What's a 1-to-1? I don't ask that on Twitter a lot. What's a 1-to-1? A 1-to-1 is in the zone, out of the zone. That's 1-to-1, that easy. Bam, like that. In the zone, out of the zone. But for us, the issue we have is that we want to see it go down and take out something at a distance rather than understanding that this move alone here, let me just make this a 1-to-1 because it bothered me. This move here can change your whole life. It can change your entire life. This one little move here. Y'all saw where I ran up that account from what was it, $600, $700? No, $700. $700 to 89,000. Wait, what move? What move? We want this little same move here. This tiny thing right here. And as you continue to take that one kick and continue to do that over and over again, guess what? You're going to be able to do this on the daily. You're going to be able to do this on the weekly. You're going to be able to do this on whatever time frame you want to do it on. But guess what? You first got to know how to do it, how to trade. That means that greed has to be under control. So guess what? If this ends up trading further down and going all the way down into here, that means that I need to be content that I got in here and I took my profit here. Why? Because me being content with this same dynamic is going to come a day where all I'm going to need is that. All I'm going to need is price to tap in and go below something. All I'm going to need is to see that happen. And whether I see that happen on one contract, I can see that happen on 5. I can see that happen on 10. I can see that happen on 20. I can go 20, 20, 20, 20, 20, 20. And I see that happening over and over and over again. And guess what? That's life-changing. If you can catch that same move every day and know when to take yourself out of the market and walk away, that can change your life forever. But you gotta be content. Yes, we will teach more stuff later on. Yes, you will understand how this relates from higher time frame to lower time frame. You will know how to master those things. But you need to start from somewhere. What does that start with? Structure. Zones. Measurable exits. There's no way that you can be up, 30, 40 points. And that same trade turns into a loss, a 20-point loss. You were up 40 points and it turned into a 20-point loss? There's no wisdom in that. None. So your job, your goal is to get comfortable with what we're doing here. Get comfortable with these measurable moves that you can take. One kick each time. One kick each time. One kick each time. Get good with that. And then you can learn another kick. And then get good with that. And then you can learn another kick. And then get good with that. And then you can learn another kick. And then get good with that. And then whatever price shows you, whatever price action we have, whatever market conditions we're in, guess what? You got a catalog of kicks to be able to run through and be like, yeah, okay, I'm seeing what the narrative is doing. Okay, so let me just, okay, this condition, I up my lot just a bit, but I moved my target down just a little bit more. So if I lose, it should be the same thing. But now it's a measurable move that I'm taking that doesn't have to run out a high or a low. But if I can get in and surgically strike at that more, listen, I can't say everything in one day, I can't teach everything in one day. But as you guys spend more time here, you'll understand why, the students become as profitable as they do very quickly. And that doesn't mean you judge yourself for not being there yet. You're in the right place. You have people that are here willing to help you. You can't demand somebody helps you. Nobody owes you anything here. But there's plenty of people standing by just willing to show you exactly what it is that they do. Talk to you about What helped them with their studying? What helped them with their guys? Look at this. Look at this entry. Look at this. Look at how. Oh, shift to break even. Yeah. Want to see the low? Yeet. You see that? Half the battle is us. Half the battle is us. And on the other side of that, we're going to be thankful that we created measurable goals, which brought us to consistency a lot faster. And no matter what's going on within the market conditions or within our own life or within our own trading, we still have a foundation to go back to. We still can find money in the market based on whatever kick it is that we have. And it was tried and true. We saw other people doing it, other people making it. We went and back tested other people's entries. You guys are not here to judge yourself and say, hey, this person is getting it faster than me. No, I was slow and steady wins the race in school. And I went ahead and blew past all these other people out there, you know, talking about them trading for years and whatnot. I told you guys my story already. I became profitable in 1 month. Yes, it's unbelievable. It's crazy. It sounds like a scam. It's out of this 1 month. There ain't no way. No, who's going to learn all this? That's a lie. That 1 month? And I was trading trend lines. I wasn't even trading the stuff I'm teaching you now. I was trading trend lines. But the stuff you're learning now, I know it's so much more dynamic than anything else you've ever been exposed to. So you got to put those things down. Set them to the side. And understand that we're here to learn this one thing. We're here to learn this one thing. We're here to learn this one thing. That's going to change the course of our life forever. That one thing, where to start. If you have a good entry, you can manage your way through it. If you have a good entry, you can manage your way through it. Hey Dave, what's your approach to time besides the high of zones in... Oh no, I don't use time at all, period. There's no such thing as time to me. Yeah, I don't use any time at all. Just price. Time is not needed. It's you know, I understand in the algorithmic community, you guys pride that. I know, you know, how important it is for those concepts. But for these concepts, why do you think there's people in West Africa trading binary options with this system? 24/7, no time element involved in that. 24/7 trading, and they're absolutely killing synthetic indices. Oblivious of whatever market open is, or whatever these different, you know, overlapping of so-and-so, or the true whatever, or, you know, oblivious of all of that. But just using price to be able to, price a narrative around price. Has nothing to do with time. Time doesn't exist in that. Narrative is more important than everything else, not time. So I don't use it at all. We start at 10:30, so this is time for us. No, that's time for you. We don't start at 10:30. We trade all day, every day. If the chart is moving, we're trading it. You need to start at 10:30. If you do not know what these concepts are and you do not know how to operate them, you need to trade at 10:30, not me. I would get that 1.5 million funds from Apex. I failed twice, but won't quit. Hey, listen. This is a marathon. It's not a race. It's a marathon. It's not a race. So, He just said there are people here who want to help teach you. Hey, listen, Mag, can you tell us some of the people who are very experienced? And listen, you got to slow down. I don't know how old you are. I don't know what your age is, but you got to really slow down. You are moving way too fast. You are too demanding. You slow down. I said that I was going to appoint people. We just went over something. We just went over the fact of why everything was moving the way it is. Let us continue to do our job on this side of the program, and let you continue to do your job and watch the videos that you still are not watching. You told me you watch all of them, and then you showed me structure the wrong way. That means that your job isn't even being done. So do your job and let us do ours, okay?